Good morning, everybody. We've got a mixed trade in the grain markets here on Friday morning. It is 6:30 a.m. Central Time. March corn futures down 1 at 5.95. March soybeans up 1 1/4 at 13.39 3/4. March Chicago wheat is down 3 3/4 at 7.76. March Kansas City wheat down 1 3/4 at 8.11. March spring wheat is up 3.5 cents at 9.95. If you guys are listening on the podcast, appreciate it. Leave me a rating, leave me a review if you have not already. If you're watching on YouTube, make sure you subscribe to the channel, hit that like button, and help me to grow this channel. My goal is to get to 5,000 subscribers in 2022. We're at about 3,400. I think we can do it. If you need some additional assistance from me, guys, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. I've got a subscription service. You should check it out. It's $49.99 per month. It includes my morning email, which goes out every business day at 6:30 a.m. Central Time. That's every overnight headline you need to be aware of, most of the weather information that you need to be aware of, all of my grain marketing recommendations. As part of that subscription service, you will see all of my subscriber-only videos. I do a new subscriber-only video every single day. Yesterday, I had a very candid conversation regarding put options and how they work in regard to grain marketing. I've handled brokerage business for many, many years. I've seen every scenario out there in regard to options, and I talked very candidly about how put options work and how a lot of times they don't work when it comes to grain marketing. So if you're interested in this sort of thing, guys, there's a lot of educational type material. There's a lot of grain marketing specific material. Certainly give that subscription deal a shot. Soybean export sales fell to a marketing year low last week. Really no good at all here. Only 524,000 metric tons for the current marketing year. That was down 35% versus the prior week. It was down 56% versus the prior 4-week average. China's still the biggest buyer here, but not a good-looking print at all. Export pricing indicating that the U.S. export window is very quickly closing. We know that Brazil is going to have an early harvest this year. Accumulated soybean sales for the marketing year are down 24% versus last year. USDA projects that soybean exports by the end of August will be down only 9.5% versus last year. So I think we've got a problem here. I would not be surprised at all to see USDA reduce its soybean export projection in future reports. Corn sales were very good last week, 1.27. That was up 27% on the week. Corn sales are looking good in terms of where we should be. We are down 6% versus last year. USDA is projecting a 9% decline overall. Wheat sales were not good, just under 200,000 for the week. That was down 53% on the week and down 43% from the prior 4-week average. Wheat sales are also kind of problematic here. They're down 23% year over year. USDA is projecting that wheat exports sales will decline by only 13%. So we've got some problems in regard to soybean sales and wheat sales as well. President Biden did talk with Russia's President Vladimir Putin yesterday. Biden reportedly warned Putin that Russia's aggressive military buildup near the Ukraine border could force NATO to move troops into Eastern Europe. He reiterated that any further violation would exact serious costs and consequences. One White House official said this following the call. One is a path of diplomacy leading toward a declaration of the situation, and the other is a path that is more focused on deterrence, including serious costs and consequences should Russia choose to proceed with a further invasion of Ukraine. When asked about the situation, experts and those in the know had kind of divided opinions here. Some people think that an invasion is imminent. Some people think it's not going to happen. Some people are kind of on the fence. So I don't think there's really anything new here today following this call. We had kind of differing opinions following the call from both sides. South American weather still a concern here. The next 7 days will be pretty warm and offer really only scattered rains for these problematic areas of southern Brazil, Argentina, and Paraguay. Some of these areas have seen rainfall recently. That's part of the reason the markets have been off. So this next 7 days really not that great. It's when you go out into that second week of January and you look at this GFS through January 15th or so that you see a lot more rain, especially in southern Brazil, especially in Paraguay, a little bit more in some of these key soybean growing areas of Argentina here. So I think that the South American weather situation is being read as kind of a bearish item here, and that's part of the reason why we've seen weakness in the markets, certainly. Russia may export some more wheat. So Econ says that they'll export 34.1 million metric tons, Econs, which is up just marginally from their previous estimate. Soybean's a very well-followed group. They said this: after a period of sluggish exports in the second half of November, exports of wheat from Russia began to speed up. The Russian government has discussed putting some sort of quota limitation restriction on wheat exports, although all of the chatter is that the numbers that they're discussing are not restrictive. So I don't think we're going to see any major restriction in regard to Russian wheat exports here for the moment. U.S. jobless claims remain historically very low. Weekly claims fell to 198,000 last week. That's an extremely low print historically. We've seen a handful of claims over the last few weeks below 200,000. The 4-week moving average in U.S. jobless claims is 199,250. That is the lowest since October of 1969. So the numbers reflect an extremely tight labor market. If you are a laborer or a skilled laborer here in the United States, or really any sort of laborer at all, this economy is actually very good for you in some respects. Tons of jobs out there. Wages are going up. The flip side of that, of course, is that we have inflation. If you're a business owner and you have to buy inputs for whatever business it is, you know that you have supply chain issues. So lots going on here, but the labor market is very good and very tight. This jobless claims chart will go down as one of the most astounding things from the COVID era. That jobless claims spiked to 6 million in April of 2020, when we had never even hit a number above 1 million prior to that historically. So it's really an incredible situation, but demand for labor is good. The labor market is very, very tight. OPEC says that it will stick to its existing policy or plans to. They didn't say it yet. This is what sources are indicating. OPEC sources indicating that they'll kind of stick to the plan here. At the moment, I have not heard of any moves to change course, said one OPEC source. 3 other OPEC sources said no change to this deal were expected. The general plan here is a 400,000 barrel per day increase for the next several months here, and OPEC has essentially resisted calls from Washington to boost output. They're just sticking to policy. I think OPEC is worried that they could get caught in some sort of spring 2020 type debacle given these COVID issues. You know, if you start to see lockdowns and say some other variant that's a lot more dangerous than this most recent variant, they could have some issues there certainly. So I think that's the deal in regard to OPEC. The cattle market yesterday was mixed. We had a lower trade in the fat cattle, higher trade in the feeder cattle market. Cash cattle has been pretty light this week. It's a holiday week, 138 to 141 through yesterday. And the outside markets this morning, the the U.S. dollar is about flat. The S&P is down 8 points. The Dow's off 80. Bonds up a little bit. Precious metals up just a little bit. The March crude oil contract in the WTI down $1.51 at 75.10. Have a wonderful New Year's, guys. I will talk to you on Monday in 2022.